Well, good morning, everyone. Today, we are going to talk about field underwriting for both life and health insurance. One thing I want you to understand from the beginning is that this test that you are preparing for is all about vocabulary, knowing what words mean. And so we really spend a lot of time making sure that you know definitions of words along the way. Keep in mind, you don't have to understand the concepts completely, but as long as you have definitions, then you can start making sense of the concepts. So I hope that makes sense in itself. So this will be our first chapter over field underwriting. Now, first, let me give you a few test taking tips that are going to be really important for you along the way. First, it is all multiple choice. So you need to make sure you eliminate answers. You should be able to eliminate at least two answers, get it down to two, read your question again, and then ask yourself which one is the better answer for the information given in the question. If you'll do that, your chances go up tremendously of finding the right answer. Really, the most important thing that we can talk about is going to be your reading skills. You have got to make sure that you are reading every word, because as human beings, we like to scan information. On this test, if you just scan the information, you don't read every word, you're going to miss an important word like the word all, except, every, always, or never. Words that'll change the meaning of a question or an answer. And so very important that we work on your test taking skills along the way. All right, so let's first go ahead and start with a test question for you. The question is, what is consideration on the part of the insured? And I have three answers for you here, A, B, or C. So you just need to pick which answer do you think it is. Okay, so you should have your answer by now. Now let's talk about the question itself. In the question, what is consideration on the part of the insured? What word or words are going to be important? Well, hopefully you are saying the word consideration. Now, you need to know what that word means in the insurance world, because outside of the insurance world, it means I'm thinking about something, I'm being considerate, blah, blah, blah. Well, let me show you a quick video about the word consideration and see if this helps you find the correct answer along the way. All right, so
Consideration, something of value that each party promises to the other. For the insured, their consideration would be the answers on the application plus their payment of premium. For the insurer, their consideration would be promising to pay in the event of loss. So consideration is something of value.
All right, so now we all have a definition for consideration. Now let's read our question again. What is consideration on the part of the insured? Is it A, deciding which type of policy to purchase, B, selecting riders to add to their base policy, or C, paying some premium? Hopefully now, after seeing that video, you know that it is C, paying some premium. That is the value for the insured, as well as their answers on the application. This is why definitions are going to be so important as we go along. All right, so let's go ahead and jump on in here as far as definitions go. First, we need to know what is insurance. The first thing you need to know, insurance is the transfer of risk to an insurance company. The whole reason there is an insurance mechanism is we are transferring the risk of a loss to the insurance company, whether that be like life insurance, health insurance, or possibly even car insurance. So let me show you a quick picture here. Car insurance. Now you might ask yourself, John, what is that? I would tell you that was my Ford Explorer a few years ago. You would say, well, John, where is it? And I would tell you it's on top of my mailbox. And you'd be like, well, John, why are you parking on top of your mailbox? I'd be like, well, duh, I have a 16-year-old daughter. All right, I could probably just stop right there. Now, I thought I could teach her to drive, which was mistake number one. So we were in front of our house. Thank God it was our house. And we were going to learn to parallel park that day. So we were sitting in the vehicle. We sat there for probably a good 5 minutes going over where to look, look in your mirrors, looking over, how to turn the wheel, all that fun stuff when you learn to parallel park. And so I said, Tara, are you ready? She said, yep. Well, the next thing I know, her foot was on the gas. We were in reverse and we were backing up over my mailbox, ripping it out of the ground from the base and high centering my vehicle on top of it. Well, that is why I have insurance. I was transferring the risk of that loss to the insurance company. Now, some good news, bad news. Good news is my daughter is now 20 years old. She is off at San Diego State enjoying the beautiful San Diego weather. She got her car. It's in one piece. I think all the mailboxes in her neighborhood are in one piece. Bad news is my son is 16. I know. Well, I've learned my lesson. I'm not teaching him how to drive. I'm letting somebody else do that. All right, but that's what insurance is all about. We're transferring the risk of a loss to an insurance company. Next, once you get licensed, there will be an agency contract between you and the insurer. That agency contract will spell out both of your duties. That agency contract contains what's known as the express authority. This term express authority you need to know for your test. That's what's written in the agency contract between you and the insurer. Next, you as an agent, you're also called a producer. You are the one that completes the applications. Next, the insurance company, another name for them is the principal. So if you see the word principal, they're talking about the insurer. Now, with life insurance, there is a beneficiary. They are the one that receives the death benefit when the insured dies. There can be more than one beneficiary on a policy. There can be as many beneficiaries as somebody might want to name. But you do need to know right away that the beneficiary is not a party to the contract, which means they don't have any rights or privileges in the policy, and which means they do not have to sign the application. So that's an important concept, that the beneficiary does not have any rights and they do not have to sign the application. Next, we have the policy owner. Now, the policy owner has all of the rights and privileges in a policy. And so let me show you a quick video about the policy owner here.
In this video, we're going to talk about policy ownership. Let's first take a look at an individual life insurance policy. Let's say we have Bob. Bob would like to buy a policy from his agent, Jane. In this case, Bob is going to be the applicant, the owner, and the insured. Now, it's important to note that as the owner, Bob is going to have all the rights and privileges in the policy, such as paying the premium, making changes to a policy, and naming a beneficiary. Now, let's look at another example where Bob wants to buy a policy on his kids. In this one, Bob, who is the parent, Jane, who is the agent. Bob, as the parent, wants to purchase a policy on his kids. He has two kids, Alex and Anna. Now, in this example, Alex and Anna, the children, will be the insureds under the policy. However, Bob, the parent, will be the owner. This is an example of third-party ownership when they are different people. Another example of third-party ownership would be a key person policy. All right, so let's say we have Phil. Phil is the business owner, the employer. Bob works for Phil. Now, Bob is not just any employee. Bob is a key employee. A key employee is someone who has specialized knowledge, skills, and business contacts, a very important part of the business operation. Now, on a key employee policy, Bob would be the insured, and Phil would be the applicant, and Phil would be the policy owner. This is also an example of third-party ownership. One more example of third-party ownership would be like group life insurance. So let's say we have Phil once again as the employer. Jane is the agent. Now Phil, he has 4 employees that work for him. Phil would like to purchase life insurance for them. In this case with group life, the employees would be the insureds under that policy. However, Phil would be the applicant and he would be the owner. This is also an example of third-party ownership. Now, it's important to note in this example that since Phil, the employer, is the owner, he gets a master policy. Employees, since they don't own it, they do not get a policy. What group participants do get are certificates of insurance. And this is very important to note for your test that group participants get certificates of insurance. Thanks for watching, and we'll see you soon.
All right, so that is an example of policy ownership and how you need to know it for your test. Next, let's go into some application procedures. The application you need to know is the main source of underwriting. This is what the insurance company uses the most to gather information about the proposed insured. There's 2 parts to an insurance application that you need to know for your test. Part 1 is general, part 2 is medical. That's all there is to it. Okay, so you've got part 1 is what? General. And then part 2 is medical information. That's really all you need to know about that. All right, as far as an application goes, there has to be at least 2 signatures on an application, the agent and the proposed insured. Now, possibly 3 if there's third-party ownership. Let's say that you're my agent and you're doing an application on me. Let's say you make a mistake on that application. There are 2 ways to correct a mistake on an application. Number 1, you, the agent, would mark it out and have the applicant, me, initial the change. So you mark it out, have the applicant initial the change. The only other way is to start over with a whole new application. Please do not use whiteout on your applications. Insurance companies do not like that. Next, let's talk about an incomplete application. All right, so you're doing an application on me. You inadvertently skip over one of the questions. You don't notice it. I don't notice it because I don't even know what questions are on your application. And let's say at the end we both sign, you turn the application into the insurance company. All right, I'm gonna give you 2 scenarios here. First scenario is, let's say the insurance company does notice that this question is not answered. Do you think that they would answer it themselves? Probably not. Are they gonna give it back to you, the agent, and have you answer it? Nope, that's not it either. What has to happen is it has to go all the way back to the applicant and have the applicant answer the question. All right, your second scenario would be that the application gets turned into the insurance company and the company does not notice that the question isn't answered and they issue the policy. And let's say I got killed in a car wreck the next day. Well, they can't come back and go, hey, wait a minute, we noticed this unanswered question on the application. We're not going to pay a death benefit. No, so here's the key. The consequences of an incomplete application will be that the company will have waived its right to ever have that question answered once the policy gets issued, and they cannot deny a claim because of the incomplete application. They have waived their right. All right, next, talk about representations. So let's say you're asking me a question on the application. The answer I give you is a representation. It is a statement that is believed to be true, but it is not guaranteed to be true. Because what if I have a few health problems and I lie to you? Because applicants will lie to you now. Well, then my representations become misrepresentations. It could be a small white lie that does not affect the underwriting or a big lie that does. That big lie is called a material misrepresentation because it was material to the underwriting of the policy. It would have affected if they would have offered me coverage or not. That material misrepresentation, that statement now becomes a warranty, an absolutely true statement upon which the validity of the insurance contract depends, because they kind of depended on me telling the truth about my big health problems, which means I have just committed fraud and it could void the contract. Now, concealment is just hiding facts. I might not be coming out and lying, but I might just be hiding those facts. Next, we're going to talk about a premium receipt. The most common type of premium receipt is a conditional receipt. A conditional receipt is only given to insured to pay some premium with their application. So let me show you a quick video on the conditional receipt. In this video, we will talk about conditional receipts. A conditional receipt is only given to insured to pay some premium with their application. With a conditional receipt, it says coverage could be effective as early as the date of application if it needs to be, as long as they paid their premium and as long as the insurer would approve them anyway. It is intended to provide coverage on a date earlier than the date of the issuance of the policy. So let's take a look at a scenario here. We have Bob. Bob is the agent. Bob is completing an application on Jane. Jane is going to be the proposed insured. At the end of the application process, they both sign. Jane gives Bob a check for at least the first month's premium. In return, Bob gives Jane a conditional receipt. Remember, the conditional receipt. The whole purpose behind a conditional receipt at this point says that coverage could be effective as early as the date of application if it needs to be, as long as she's paid that premium and as long as the company would approve her anyway. So let's look at the scenario. Jane is driving down the road, a leisurely Sunday drive, and all of a sudden, bam, here comes this deer out in front of her and kills her. Well, the insurance company, they haven't completed underwriting her policy. Underwriting would continue as long as they would have approved her anyway, and as long as she had paid that premium, then they would pay a death benefit to her beneficiary. Now, what if, however, Jane had said, you know what, I'm not going to give you my hard-earned money just yet, which she didn't have to do, and she got killed in a car wreck. Would they pay a death benefit? No. So here's the key on the test, as well as in life, ladies. It's all about the money. Did money exchange hands to know whether there could be coverage in effect? Remember, no money, no coverage. So another example, on the effective date of coverage, when there's a conditional receipt, effective date will either be the date of the application or the date of the medical exam, whichever occurs last. So let's take a look at some timelines here and some examples for you. Jane completed her application on January 5th and paid her initial premium. Bob gave her a conditional receipt. 2 days later, Bob turned the application into the insurance company. A week later, they issued her policy. A week later, Bob delivers her policy. Now, what is the effective date of coverage? Well, your options are either A, the date of the medical exam, B, date of policy approval, C, date of application, or D, date of policy delivery. What do you think? Hopefully you picked C, date of application. All right, here's scenario number 2 for you. January 5th, Jane completes her application, pays her premium. Bob gives her a conditional receipt. 2 days later, he turns the application into the insurance company. A week later,
Jane has a paramedical exam. This is where a nurse comes out, draws her blood, and asks her more medical questions. A week later, they issue Jane's policy. A week later, Bob delivers that policy. What's the effective date of coverage? All right, so the effective date of coverage is either going to be A, date of medical exam, B, date of policy approval, C, date of application, or D, date of policy delivery. Hopefully you pick A, date of medical exam. Very good. All right, let me give you another one on the conditional receipt. January 5th, completed the application, but Jane said, I'm not going to give you my hard-earned money just yet. Bob said, no problem, you don't have to. 2 days later, turn the application into the insurance company. A week later, they issue Jane's policy. A week later, Bob delivers that policy. Now we need to know what's the effective date of coverage. So the effective date of coverage will either be A, date of medical exam, B, date of policy approval, C, date of application, or D, date of policy delivery. Hopefully you pick D, date of policy delivery. But here's things that have to happen on policy delivery. The agent always delivers the policy, has to have Jane sign a statement of good health stating her health hasn't changed. And the agent has to collect at least the first month's premium, and that's when coverage goes into effect. All right, I got more for you here, another timeline. Here we go, January 5th, Jane completes the application, pays her initial premium. Bob gives her a conditional receipt. 2 days later, he turns the application into the insurance company. A week later, Jane has a paramedical exam where a nurse comes out, draws her blood. Now, the results of this paramedical exam showed Jane had nicotine in her system. Well, evidently, Jane likes to smoke a little bit. On her application, Jane said she was a non-smoker, but evidently, she likes to smoke pipes. All right, let's stop right there. Is the insurance company just going to decline Jane altogether because she's a smoker right now? Well, no. What they're going to do is they're going to rate her up. We'll talk more about that later on. So let's start over with our timeline. Jane paid her premium. Bob gave her a conditional receipt. 2 days later, he turns the application into the insurance company. A week later, Jane has her paramedical exam. Nurse comes out, draws her blood. Remember, the results showed that Jane had nicotine in her system. Jane is a pipe smoker. She doesn't really like cigarettes, I guess. A week later, they issue her policy. A week later, Bob delivers her policy. Now, what's the effective date of coverage going to be this time? Your options are for the effective date either going to be A, date of medical exam, B, date of policy approval, C, date of application, or D, date of policy delivery. What do you think? Hopefully you pick D, date of policy delivery. And here's the things that have to happen. Remember, the agent always delivers the policy, has to have Jane sign a statement of good health, has to have Jane sign the amendment saying, okay, I agree to pay more money, and then collect that extra money, and that's when the coverage goes into effect. So that is your conditional receipt, only given to insureds who pay premium with their application. We'll see you on the next video.